the coronavirus outbreak shuts down Tesla's factory in China. And then the stock jumps more than 300 points in 3 days, before dropping more than 100 points yesterday. Could there be a secret group of Chinese investors manipulating the stock? Today on Dumb Money Live. Good morning. Thank you for joining us for this special live broadcast. I'm Dave Hanson, joined as always by Chris Camillo and Jordan McLean. Together, we are Dumb Money, and today we're exploring the phenomenon that is Tesla stock. It's been on an insane run the past few weeks, hitting an all-time high of $968.99 on Tuesday, that days after the announcement that their new factory in Shanghai was being shut down because of the coronavirus. Now, Chris has a theory, you might call it a conspiracy theory, the theory that perhaps the Chinese government is somehow manipulating the stock of Tesla and other stocks that are closely tied to China, stocks that might otherwise be dramatically lower right now because of the coronavirus. So, Chris, let's start with your theory. Could China really be manipulating Tesla's stock price?
Well, I'm not a conspiracy theorist. You know that, right?
Yes. But
there's just too much smoke here to ignore. So you're going to have to hear me out, all right? I'm going to take us back to 2015, the great Chinese market crash of summer of 15. You remember that? Chinese market was down 40%? Okay, so back in 15, you might or might not know that the Chinese government created something called the National Team. The National Team was created to prop up Chinese financial markets. So this is really interesting because
and it was basically a group of financial institutions that were funded by the Chinese government.
State-owned financial brokers, okay? Now, this is not injecting money into the banking system. Every country does that. We do that. China does that. China just put, I think, 170 billion. I think it was actually over 200 billion in 2 days earlier this week. Obviously, with the coronavirus, that's to be expected, right? This is well beyond that. This is an actual team of state-owned brokers who were designated to help prop up markets by purchasing individual stocks, okay? Now, at the time, they helped propel the Chinese market and prop it up from that. I think it was down 40% that summer. Over the course of a few months since they started the National Team, the market recuperated. I think it came back up 20 or 23%. So it was really successful. From what I understand, the National Team was now intact and part of the Chinese government strategy to prop up markets during bad times, okay? And they've gotten a lot of flack for that over the years because the concept is, when do they sell their stock, right? If they're buying all this stock, and could it have the opposite effect when they exit? Actually, the Chinese government has come out at times and committed to their people, hey, we won't sell anything until the market reaches, you know, this level to kind of relieve those concerns. So that was 2015.
The whole existence of this National Team isn't really a secret. It is, you know, their version of the SEC reports on what they're doing, and so it's very much kind of a known thing with the Chinese stock market.
Yes.
And you sent me an article today that back in 2015, they actually owned 6% of all of mainland China's stock market, right?
I think that I was at 15 or 2019. I might have.
I think it was, the article you sent was 2015, but that's probably roughly how much money they have to play with.
Yes. So fast forward now, okay, 2019. The National Team is still at play. They're active. We have trade wars happening, right? Earlier 2019, major trade wars. Upon those trade wars, PetroChina and China Petroleum, two companies that are paramount to the Chinese economy, start to go down. And the National Team gets in there, prop up both of the stocks. I think it was like midday during the crash. They propped up both of those stocks and were able to cut the losses in half by end of the trading day. So at that point in time, It's pretty well known that the national team now owns thousands of Chinese stocks. I don't know whether it's 6% or more of the Chinese stock market is actually owned by the Chinese national team, which just seems insane, right? So knowing that, now let's talk about Tesla, all right? 2018, one of the largest share owners in Tesla, I think they own right at about 5%, which I believe was the maximum limit at the time of Tesla for foreign-owned interest in Tesla prior to disclosure, was the Saudi PIF. That's the Saudi Public Investment Fund, right? Billions of dollars of Tesla. Now, you might recall that kind of famous quote from Elon Musk, which basically said that he had a buyer to take Tesla private. At $420 a share, he had a buyer, right? But evidently he just said, no, I didn't want to take it, private at $420 a share, which is significantly higher than what Tesla was trading at the time. Now, the Saudi PIF, from what we understand, completely freaked out about all these rumors about them taking Tesla private at $420 a share. It later came out that there was no formal agreement to take them private at $420 a share. There was not enough evidence. There were some conversations. The Saudi PIF, from what has been written, supposedly at that point in time, completely pulled out of Tesla by hedging their shares, okay? So by leveraging derivatives, they essentially exited Tesla at a few months after that whole thing happened with Elon saying that they were going to take them private at $420 a share. So at that point in time, one of his largest investors, Saudi Arabia, they're out, right? They're out. He then starts taking a number of personal trips to China, right? Over that time period, Tencent, which is obviously one of China's largest companies, becomes a 5% owner in Tesla, okay? Elon is taking trip after trip to China. We later find out about the Shanghai factory that's actually, which is quite an amazing feat. Somehow he was able to build this factory, this gigafactory in China, and like a year later is producing cars out of it, which was amazing, right? That entire operation was financed by China, okay? $2 billion of Chinese money to finance the factory. It's not only producing the 3, okay? It's also producing the Tesla, the Y, okay? And beyond that, recently it's been announced that Elon is now going to design a car in China, a Chinese designed Tesla that will become the Tesla for the world. Why does he need to do that? Well, China, listen, the Chinese public, they do not consume cars at price points of 70K plus, right? That's pretty obvious. The average car in China, I think, goes for what, $14,000? So he needs to redesign an entirely new form of car, a new form of Tesla for the Chinese market and for the rest of the world. That will be done in China, designed in China, produced in China with Chinese parts, right? Also, by the way, the Model 3 now, as we recently learned, which is a big part of this run-up, is being produced with cheaper Chinese parts. So over the course of the past 12 to 14 months, we have seen Elon buddy up with China unlike anything any of us expected. He now has probably the most prolific partnership we have ever seen between a U.S. company and China. And the degree to how strong that relationship is, we just don't even know, okay? So we have two things happening. We have, over the course of the past 5 years, the Chinese national team, which essentially has a mandate to prop up the Chinese stock market and Chinese interest, okay, in financial markets. Meanwhile, over the course of the last year, we have Elon Musk developing what has become the strongest partnership an American company has ever had with the Chinese government, to where China, as we know, let's put it at a third thing, China has already said They want to be the world leader in electrification, period. China has made that a mandate, right? So we have, go ahead.
Just this week, with everything going on, Chinese state media confirmed that the national team is standing by with the equivalent of $14 billion US to plow back into the stock market if necessary. The Financial Times says that traders at 3 brokerages confirmed they've received guidance from the China Securities Regulatory Commission telling them to limit stock sales and refrain from betting against the market in this kind of selling. Not the kind of thing that our SEC would come out and say. But do you think that this national team is behind the Tesla stock rise and fall, or do you think it's perhaps another group of even more mysterious investors?
There's nothing, listen, there's nothing else out there, okay? But let's just add fuel to the fire, okay? What is the spark that created this? Coronavirus, obviously, right? Coronavirus, and by the way, I have been trading for 30 years, okay? I've been in the market trading for 30 years, and I could count on one hand the number of times that the market has just been completely oblivious to tail risk, okay? Tail risk, we talked about this in our last live episode, black swans, right? It is blowing my mind the degree to which financial markets are just completely ignoring this tail risk. The one entity which is not ignoring tail risk right now is China, okay? They see what's happening with coronavirus. They are upfront. They have the real data. They're seeing it in real time. They know exactly how big this tail risk is, not just for China, but for the entire world, right? And I believe, and I don't think it's a far stretch, that their number one priority right now is protecting Chinese interest. And where Chinese interest 5 years ago used to be just protecting Chinese companies, Chinese oil, the Chinese market, in 2020, Chinese interest encompass American companies that are now essentially partnered with China. The 3 biggest companies I could think of that are most closely partnered with China in 2020 are Tesla, Las Vegas Sands, and Wynn Casinos. For those of y'all that are not familiar with Macau, Macau is, as of 1999, is a Chinese-owned entity that, like Hong Kong, will be completely controlled by China in 2049 or some 2042, right? But Macau is the future of China. Macau is essentially operated almost exclusively by Las Vegas Sands and Wynn, 2 American companies.
And those American companies, by the way, I know that Wynn gets 69% of its revenue from China. It has probably the greatest exposure among U.S. companies, according to a Morgan Stanley report. Las Vegas Sands, I think, gets 65% of its revenue from China.
Yes. So we have this coronavirus, which, again, massively just ignored by U.S. financial markets. But China knows exactly the risk there, and they are taking extreme measures, starting this last Monday, really last week, going into this last Monday, to protect Chinese interest. I believe the national team is a big part of that. China has what they disclose, and they have what they don't disclose. We only know what we've been told about the national team. We have no idea what we haven't been told about the national team and how many billions to tens of billions of dollars they are spending to prop up anything that China deems to be a Chinese interest, okay? And I don't know how, unless you're wearing blindfolds, you could ignore the fact that Tesla is a huge Chinese interest right now. Tesla is the future of electrification. Tencent is their largest shareholder, to my knowledge. I don't know how many other Chinese-owned companies, Chinese-owned brokers, Chinese investors are now major owners of Tesla as of this last Monday, thanks in part to the national team, which is backed by Chinese government money. I am saying that I believe that this last run-up in Tesla was fueled in a large part with Chinese money, because I don't know of any other money that would have propelled it to the extent that it's been propelled this last week. And I know everyone's talking about short sellers, short squeeze. Let's talk about that. Tesla, yes, it was one of the most shorted stocks, right, in the world. But understand that a big part of Tesla's short position was convertible note hedging, right? On that big raise they had to do last year, that multi-billion-dollar raise. Probably all of that raise that they did last year was hedged with short positions, right? And it's already been written about, I think as of 2 days ago, that a lot of those shorts haven't even covered because there's no reason to cover. They're essentially market neutral shorts on Tesla, all right? They have convertible notes, right, that are essentially are balancing out the short position. So the short position on Tesla is not as big as everyone thinks it is. Maybe as much as 40% or more of the short position is market neutral and never needs to be covered, right? So I'm not saying that short covering wasn't a big part of this, but what pushed that short covering? And a lot of that started on Monday, which just happened to be the big day when China, it looks like, gave the green light to their national team to start protecting Chinese interests. $170 billion thrown into Chinese banking system, the national team going full force. What else happened on Monday? Completely, and you can talk about this, Dave, the most irrational movement I have ever seen in 30 years behind Wynn and Las Vegas Sands, the two companies that stand to lose the absolute most from this China lockdown, have been essentially going up every single day. Every single
in complete disbelief that we were watching that happen. And, you know, part of it is the Chinese, the companies in the casino space that are heavily influenced by Chinese revenue, they had gone down because the China's economy has pulled back anyway. And so that kind of is a way to explain, but it makes no sense that on that day, those stocks were not only just holding tight, but they were actually going up when it made 0 sense. They were shutting down casinos for weeks.
Mind-boggling. The day that they actually announced that Macau was shutting down the casino for 2 weeks, 2 weeks. Is there anybody in this universe that believes they're only shutting the casinos down for 2 weeks? Do you think 2 weeks from now, coronavirus in China has dissipated and everyone let's rush to Macau to go gamble at casinos? Are you out of your freaking mind? Those casinos will be lucky to open up in 2 months, much rather less 2 weeks. The entire quarter, their revenue might be down 80 to 90% in China, which is 60 to 70% of their overall revenue for the entire next quarter, and their stocks are going up. Granted, their stocks were down 15% or so on the initial coronavirus news a few weeks ago, but they're still, that was off of like 52-week all-time highs, okay? They're still trading at the high range of their all-time norms. And this is the most catastrophic thing to ever happen to these two companies. Who on earth is propping up these stocks? I wonder who. I wonder who.
Who could afford to?
Could it be?
It's definitely not individual retail investors like us, and I can't imagine a hedge fund is making that move right now. There's no reason.
Hell no.
All right, so let's break that.
All right, go ahead.
So Tesla, also something else happened on Friday. What was that? Earnings. So they had a really good earnings.
Their earnings were not really good.
What are you talking about? It's like the second time they've been profitable since they've started, right? So
you're talking about the casinos or Tesla?
You're about Tesla.
Oh, I'm sorry. I thought you were talking about Las Vegas.
Friday.
Okay, I'm sorry. So Las Vegas Sands also had earnings this last week. So excuse me.
Yeah. No. So Tesla had earnings on Friday, and they were really positive, right? The other thing that we know is that Elon gets a bonus on his stock if it stays above like $400, right? That's one of his exec comp bonuses. So if it stays above like $450 and he gets like $900 million,
conspiracy. But again, Elon's not propping it up, right? It's not him that can do
Well,
that.
he's not propping it up, right? But he's got an interest for it to stay propped up. So
he has an interest, and I don't want to say, all right, listen, I don't want to say that Elon would do anything like that. But, I mean, China, let's put it this way. Do we all agree that it's in China's interest to to add to their friendship with Elon, right? Is that all? Is in China?
I think you've got a confluence of factors, right? So you've got earnings that were really good. You've got obviously probably China's propping it up a little bit, but you combine those two things, right? You increase the amount that people are buying with a small short squeeze. And
Yeah,
the confluence of factors that drove it through the roof.
Here's the difference. I don't think China's propping it up a little bit. I think China is propping it up at an unprecedented rate. Have you seen the volume turnover in Tesla this week? They've been trading $35 to $40 billion of stock a day. 35 to 40 billion. It was not that long ago that Tesla, the entire valuation was $35 to $40 billion. It's trading $35 to $40 billion turnover every day. That means the entire market cap of that stock has been turned over from one set of investors to another set of investors, right? Who are the new investors? Who are the new investors, the marginal buyers of Tesla at $5, $6, $7, $8, $900 at $30 billion a day? Who could that be? Who has that much money? Who has that much liquidity right now to be the marginal buyers of Tesla? I know of one entity that could do it and do it easily, and I can't think of any other. I don't think it's retail trade. Listen, retail traders were part of it. Were there a few thousand people through Robinhood that bought Tesla for the first time this week? I think I was seeing some reports of that. Of course there were, right? Of course there were. But they're not. Those guys are not moving $30 to $40 billion of Tesla stock a day for the last 4 days in a row.
I've also read, and I don't disagree with you. I'm just saying that I've also read that institutionals are looking at Tesla right now because there's really no other large cap stock that has the ability for the green play, right? And so there's really nowhere else to put your money for green energy. For,
Jordan, that's been the
solar, going in EVs.
Jordan, that's been the case for the last 2 years.
Right.
Nothing's changed. Yeah, they had a decent earnings report. Yeah, they're doing well in China. But you know what else has happened to Tesla? Their factories are shut down. They can't deliver cars to China. They just announced this morning their dealerships are shut in China. Like they can't even produce this whole Shanghai. They might not sell cars in China for 5 more months. That
literally shut down. They're out of business in China, and we don't know. We have no idea when it will get better for them in China.
Oh, forget about that. How about the fact that just car parts in general, where do most car parts come from? China. Ford, Toyota just announced that they're looking for car parts for their cars. Otherwise, they might have to shut down production. Hyundai shut down production in Korea, right? Because they can't get parts out of China. Guess who else has parts out of China? Tesla. They can't even get parts for their cars right now. Yet they're at $700, $800, $900 a share. Insanity. I'm just saying, like, I'm not against Tesla at all. Like, I have no issues with Tesla. I actually love a lot of the stuff that Tesla does. I'm not even saying that Tesla was a bad investment at 350, at 400, maybe in 450, maybe even 500, right? But like, what the hell is going on, and why is no one talking about this story of who's behind this? And what does it actually mean long term? Because that's what we want to talk about today. What does this mean long term? Because I know I'm going to look at these comments coming in a minute. But Wynn earnings are tonight, right? Wynn earnings are tonight. I do have Wynn puts. I have been trading Wynn puts. I've gotten killed on some of them. Should I even own puts going into tomorrow with earnings tonight? Because does anything even matter anymore if the China national team has a mandate to protect Chinese interests, protect Macau interests, protect the parts makers, the automotive, like Tesla, Wynn, Las Vegas Sands. Does anything matter?
It makes it impossible to know if anything matters. It's an insane world where if you can have a government controlling our stocks, how are we supposed to know what to do?
You just have, as traders, you have to understand this. So
because the thing is, when Tesla was at 900, there was an analyst that came out that said it should be at 7,000. Very next day, it drops 20%, but it's still up over 70% for the year, 140% for the past 12 months.
Yeah,
well, it's up 8% today for no reason, right? So that's pretty fishy.
Insane.
Well, that's just the craziness of this market.
Okay, who do we think sold Tesla when it dropped 60 points? Right? Listen, that's just a technical thing, right? Tesla ran from 400 to 960 bucks a share. By the way, for those of y'all that follow me on Twitter, at Chris Camillo, you will see that I posted my Tesla short. I shorted Tesla through puts when it was at like 960 a share. I just pure luck, right? I bought those puts at 12,000. I sold them just about an hour ago for 25,000. So it was a really nice trade. I also bought numerous other Tesla puts while it was in the 800s, the upper 700s. I've now exited all of my Tesla short position. It was a great trade.
So you are out of your Tesla puts?
I might, want to know how much money I made? I think I made about $60,000, $70,000. I made enough money shorting Tesla in the last 2 days to buy a Tesla. Just kidding. I'm going to buy a Bronco, but that's what I want. But I did make enough money to buy a Tesla off my Tesla puts this week, which is cool. Listen, I actually love Tesla, guys. I love the company. I love what they're doing. I don't know if it's good or bad here at 700 bucks a share or whatever it's at right this moment in time. But
I don't know if we'll ever see it, but I actually want a Cybertruck.
You're nuts, Dave. That is the ugliest thing I've ever seen. But I do like Tesla. Here's the thing, guys. What do we do right now? Because I think we're looking at, I haven't slept in 5 days. Yeah, you know this because you guys get stuff from me at 2 in the morning, 3 in the morning that I'm shooting over to you. I think that we are looking at tail risk in the market right now from coronavirus. The reports are coming out all through the day, all through the night. Just supplier after manufacturer, like China it's like a slow motion. China is literally the entire continent. It's shutting down. It is actually slowly shutting down 24 hours a day. I can't even imagine. I'm so nervous this weekend. What happens when Shanghai gets put on lockdown on Sunday or next Tuesday or Wednesday? What happens if Beijing gets put on lockdown? What happens when the entire continent, when Singapore, when Hong Kong, when Japan, like what happens if the entire continent puts on lockdown and all manufacturing essentially gets shut down? Can you even comprehend that? That's at a point when not even a government, not even China and the US can even support markets at that point. The tail risk. Tail risk is when you have a standard deviation that's like over 3x, right? What the normal standard, a move that's over 3x your standard deviation. I'm not saying that's going to happen, but you can't say that there's not a small risk of that happening. Do you agree? I don't call it 3%, 5%, 8%. I don't know what the percentage is.
It is mind-blowing to me that
the biggest worry here is that it's slowing down, right? So the death rate's not slowing down. The infection rate's not slowing down. Those things are pretty scary. On the converse side, though, there's really where else are you going to put your money, right? And so, yeah, you're going to see some quarterly earnings drop. Are you going to? How big of a long-term issue is this going to be?
I mean,
I think it could be a huge long-term issue. I don't think we have any idea what the impact is going to be, and I am frankly shocked that nobody has come out and caused market panic. Just last night, Chris is not kidding. He actually sends us text all night long. But this one right here was him telling me that the first market negative sell side report that I've seen on the coronavirus. The headline on this one: JP Morgan cuts equities and asset allocation on virus fallout. It was a Bloomberg article, basically recommending reining in portfolio risk with a cut in active equity weights from 7% down to 5%, and an increase in corporate bonds from -5 to -7. From -7 to -5.
Right.
So it's the first time that a U.S. analyst has actually said, "Oh, we might be re-evaluating things because of the coronavirus." Until now, everyone was pretending everything's fine.
Right. So basically, they came out and said we are overweight on stocks, but just a little bit less overweight. Right. That's all they're saying. We went from 7 to 5% overweight on stocks, and then shift that money a little bit to bonds. I mean, there's no money to be made in bonds. So what's the?
Well, and that was a very minor adjustment that they made to their portfolios. But the quote here is, JP Morgan sees a significant chance of unexpected reacceleration of new coronavirus cases as factories reopen in China and more people come into contact with each other. If the factories fail to reopen, the economic impact could prove much more severe. So finally, someone said that. And until now, everything's been smooth sailing. And I haven't adjusted my portfolios. I haven't really protected myself, but I know that this could be huge or it could be nothing.
Guys, mark my words, all right? I'm not saying anything's going to happen, but we could be one news story away, one news event away. That news event could be Beijing's getting put on lockdown. It could be China coming out and saying we have 10,000 new cases today instead of 3,000 new cases. It could be we have 50 new cases in the U.S., in New York, in California. It could be the first person in the U.S. dies from this. We could be one news story away from hitting a tipping point where the sentiment goes from, which is just like SARS, we'll get over it, it's just going to be a temporary thing, to, whoa, oh shit, is this, wait, we should maybe pay attention to this. And then you could just see the entire market start to unravel. And if that happens over the course of a weekend, when people have time to just think about it and there's tension because you have multiple days, right, of new stuff coming out, you could see 1,000, 1,500 point move in the market in an instant with how high we are right now.
Yeah. Which is, let's talk about what we're doing. I haven't done anything yet, but I'm not planning to sell my stocks. I love the stocks that I'm in long term, but there are some that would be very susceptible to coronavirus. So for me, it's looking at some sort of kind of medium, longer term puts on the S&P or something that kind of mirrors my portfolio. What about you, Chris?
Okay, so interesting. I changed my strategy over the past week, right? Last week, I was all about shorting Las Vegas Sands, Wynn. Now I have this eerie suspicion that the stocks that China has an interest in protecting are the stocks that might actually oddly do best in this scenario, because they have money getting pushed into them for no reason other than China does not want to see those companies get destroyed. By the way, I want to mention this one thing I forgot earlier. Both Las Vegas Sands and Wynn have both recently committed to each spending $2 billion in Macau to renovate and build new properties. Macau is renovating one of their hotels to be the new Londoner. They're going to build out a Four Seasons. They're going to build out a St. Regis, another $2 billion by Wynn. This whole thing is so friendly. We're going to spend billions of dollars on Macau. We need to keep our stock healthy. You know, like China's like supporting their stock prices, right? Like it's just, there's way too much smoke here. There's way too much self-interest for me not to believe that they're going to continue to prop up those stocks. That said, I do have a put on Wynn. I just can't help myself. It's insane. I just have to, right? I have to. I feel like
you're betting against the Chinese government. Is that what I'm hearing right now?
Even though I know I shouldn't because they're against me, but mainly the main thing that I'm doing, guys, is I'm not selling any of my portfolio because I do love everything I'm in. But I am buying I'm just buying market puts. I'm buying puts on SPY. I'm buying them weekly right now. I'm contemplating right now. I have puts that expire tomorrow. I did very well on those puts last week, by the way, on those that when the market drove down 600 points on Friday. I continue to think that the market is going to get nervous before the weekend, just like last week, especially after this run we've had. So I have a significant amount of puts going that expire tomorrow. I hope, I hope people wake up to what's happening, and maybe we get a little rush, a little downdraft in the market. But I'm going to protect myself with just market puts, probably week to week, quite honestly. And that's it. Listen, it's going to cost me money, and I hope coronavirus is not as bad as it seems, and the market continues to rally. And if it does, it's just the cost of doing business. It's the cost of having a portfolio that is the vast majority of portfolios in equity. But there's tail risk. I'm not willing to take a massive dump in the market over the weekend. I have to protect those interests.
And how about you, Jordan?
Yeah, so I'll look out for opportunities to buy puts where it makes sense, but probably not too much, and really just look for buying opportunities. I think is the biggest thing for me right now. So if we see the market take a dip on Friday, maybe buy then, maybe watch over the weekend, see what happens on Monday. From what I understand, though, there's so much free cash out there right now that's just waiting to be invested that all these little dips are going to get bought up. So you gotta jump.
Jordan just sounds like CNBC, like my boss right now. Hey, that's okay. That's okay. That is the sentiment of the market. I will talk about one stock that I doubled down on, and I have a huge position on them already. I doubled down on them this week because I just don't care. I need to have twice as much as I've had the past 2 years. Amazon, all right? Amazon is my largest long-term position. I've had it since $300 a share. I've made 7 figures for me over the past few years. And I doubled down on my Amazon position because Jeff Bezos, I think Amazon will be at 2,300 right now if it weren't for Jeff Bezos selling. What did he sell? $2 billion of stock in the last week?
Yeah, it's the second or third time that he's made a significant sale of stock, but it's not tied to anything about Amazon. It's tied to this is just what you have to do because you can't keep it forever.
No, Jeff Bezos,
right?
Yeah, he used to model rockets as a kid. He still does it now. It costs him billions of dollars, though, right? So he said he's going to take a few billion every year for both his rocket company and for his new girlfriend, right? And for whatever else he's doing. You see him in his fancy, his silver outfits and stuff he wears now. Have you seen when he dresses? I hope it's just a phase, but he's going to take a few billion every year, and he does it this time of year, right? And so he just did it. He took his money out. I think it's still going on right now. It's probably the whole week. He's going to take a few billion out. It's a major downer for Amazon stock price action. But I'm taking advantage of it, man. I'm doubling down this week in Amazon. I'm actually doing it through call options because of this whole, if we have a catastrophe in the market that's broad-based, I don't want to lose $500,000 in Amazon over the next few weeks. I'd rather lose 50K at a time. So I'm basically doubling my position in Amazon, which has been 1,000 shares to 2,000 shares. I'm doing it through options. So I purchase options. They expire every week. And once I feel comfortable that the coronavirus thing is behind us, I'll just exercise those options and shares so I can start the time clock on my long-term gains, of course.
And I just want to remind everyone that we are watching the comments. I'm going to try to flash as many of them on the screen as I can. We'll try to respond to some through the video. If you're watching live, if you're watching the replay of this, be sure you leave a comment for us. We will respond to every single one in writing. But we'll take questions. We're going to try to keep this going for an hour. We've been on for 40 minutes now almost. So what are your thoughts about
the thing that's going to end this live broadcast is we have to start filming an episode of Dumb Money. We have the coolest company we're meeting with, and you'll see it, I guess, in a couple weeks on Dumb Money, but they're meeting us right here. So I'm going to shut down this episode in about 20 minutes and we got to.
And I'm going to have to drive there because I'm 15 minutes away from you are.
Okay. So what, do you see any comments that are interesting, Jordan, Dave?
So somebody mentioned
I've been floating a lot of them on the screen. The virus, if it takes off, people will lock themselves in their homes, which will cause a massive recession. Do you see that happening?
100% it's going to happen. Do I see it happening? Have you not seen
China's economy has already been slowing down. And you sent me the article last night about how they're now kind of like, oh, we're going to have to lower our tariffs because we need people to take our stuff.
Yeah, I mean, guys, look, just look at what's happening in China right now. People are frightened. Let's talk about last week's episode. We talked about the ability, this virus, you can transmit the virus, right, with asymptomatic, which is huge. The incubation period lasts as long as 14 days. That's why you have people stuck on a cruise ship for 14 days in Japan, right? When you have those scenarios, we're not going to learn anything anytime soon. Jordan, do you see this like reaching a tipping point in the next few days where it starts to get better? How does that even happen? Like I don't with the incubation period being as long as it is, right? Like would that even happen?
Yeah, so what they're trying to do, so basically what China is trying to do is they're trying to lower the infection rate by isolating people, right? And so they're locking down cities, making curfews, things like that, because if you let this thing go in the wild, we've seen that the transmission rate's 4 or better, or I guess worse, really.
We'll put that people down. Frame that. How bad is that? Because we talked about this a lot this week. How bad is that?
It's really bad. Like it's worse than anything that we've seen, except for maybe like the measles, right?
Yeah.
So you haven't seen anything like this in our lifetimes.
And talk about not just the death rate. The death rate is debatable. The death rate is anywhere between 2 and 8%. There's theories. I mean,
higher, right? We don't know. That's it. That's the other thing that really bothers me is that we're claiming like a 3 or 4% death rate, but if you look at the numbers, we've got like what 500 or 600 people that are dead, and we've got only 800 people have actually been healed, right? And so the death rates, I don't think we're going to know what it is for a while now.
Yeah, and I saw this morning that Bill and Melinda Gates are putting like some crazy $100 million towards finding a vaccine for this virus.
And let's not forget, we can't trust the Chinese numbers, right? I mean, that's obvious, right? But this is just what they're telling us. I've seen studies this week that people were tracking the cremation facilities in China, looking at the capacity of how many people they could cremate a day. And there are reports that they're having to work 24 hours a day, and that they actually have bodies lining up. They can't even keep up with the bodies coming in. And it's really hard to believe that the death rate is not actually higher. I don't want, like, I'm not going to have conspiracy theories there, but let's just say, can we agree that we just don't know?
We don't know.
And so
there's no way to know, and you can't really trust the information that's coming out of China.
You know what's so funny? Any other time we haven't known something, even if the two outcomes were both good, if we didn't know which good outcome was going to happen, the market freaks out.
Yes, because the market hates uncertainty of any kind.
Who cares?
Makes no sense. We're living in a weird alternate universe right now. It's like we're in the upside down.
There's only one thing that makes sense, in that you have the second largest economy in the world, government, pumping money to support that insanity. That's the only thing that would make sense, and that's why we're doing this episode. There is a power here that is so big and influential. And by the way, who knows how long they might be able to support this thing throughout the world could fall apart, and they might just keep printing money and buying stocks. Who knows, right? And that's what's kind of scary as a trader, is you can't really trust the system anymore.
Yeah, and on the other side too, Lee just commented the death rate could be a lot lower too. We don't know how many people got infected that didn't report it. You know, there's not good information on this, and that's the kind of thing that traditionally would make the stock market crater, because it needs to know what's going on. Anytime there's uncertainty, the stock market, when it's a weekend and people don't know what might happen over the weekend, the stock market went down last weekend.
So true. We just don't know. I think what we do know is this is not the flu. You know, a lot of people are out there saying, "Oh, it's the flu is worse." No, it's not, because what we do know is that if this virus was fully global as the flu is, you're not going to see 20, 30,000 deaths in the U.S. You're going to see hundreds and hundreds and hundreds of thousands, if not millions of deaths, if this was fully global, which is obviously not yet. I think the best way, I mean, there have been some published reports by virologists. There's only a few ways that this can end. And really the best way that this ends is through containment. So containment, wouldn't you agree, Jordan, is really the best case scenario here? Yeah.
Which is why people are being isolated. It's why airlines are shutting down flights to China. And then you let it run its course.
Yeah. So the big question, the thing that I'm looking for every day, 24 hours a day, is the degree to which I feel this is contained. The problem is that helps us here in America, but it really doesn't help us if it's contained to China, because without China, we are all screwed. I mean, we need China. I mean, even if you said there's not a single case outside of China, the market is dead in the water. Like if China is, if this is going to realize, China, we're done.
Everybody's all these public companies, their valuations are based on future growth in China, right? And so if that doesn't happen, it's a big problem.
Well, no, I'm not even talking about that. Like we need even American companies that aren't even counting on selling in China. We still get our parts from China. Yeah. We get our we need China.
Where's my phone going to come from?
Yeah,
right. Like I look around me, everything that I see, my computer, my camera, everything, maybe even this coffee mug. No, Indonesia. But we need China.
Yeah. So all I'm saying, guys, is understand tail risk. Go out. We said it last week. Read Black Swan by Nassim Taleb. Just understand. Be able to frame the risk here, and just be aware that your portfolio in a type of tail risk like this, there's a real risk of your portfolio taking a hit that is not single digits. It could be 20, 30, 40, 50%. I mean, I look at my equity portfolio and every day I look at it and go, am I willing to live with a 50% haircut? Am I willing to live with that? Because that is a real possibility. And if you look at your equity portfolio and you're not willing to live with a 50% haircut, then you've better learn how to hedge your portfolio in situations like this and be willing to pay the price, because hedging is not cheap. I hedged, in 2008, during the great market crash, I amazingly was able to hedge about a quarter through that crash. I fully hedged, and thank God it was expensive, but it saved me at least 50% of my losses were saved because of that. But it's really expensive to hedge. That's what people don't appreciate. Like I'm spending probably $50,000 a week to hedge my portfolio until I feel comfortable with the tail risk of coronavirus. So, that's just something we need to think about. What else we got, Dave? Anything in here?
I'm trying to read through some comments here. Production of lithium-ion batteries will be difficult.
Could it trigger 2000? Guys, listen. I'm not trying to get too fancy with my stock picks here. There's a lot of companies you could say would do bad or would do better in this scenario. If you want to pick who's going to get slaughtered, there's no two companies on earth that are going to get slaughtered worse than LVS and Wynn casinos, right? 70% of the revenue comes from Macau, and Macau, guys, is shut down. That you can stay in the hotel if you want. The restaurants are pretty much shut down. The casino floor is shut down for 2 weeks. I believe it will be shut down for months. So how about that?
Yeah.
70% of your portfolio, 70% of your revenue just gone for as long as this virus lasts. It never even has to make its way to the US. Not at all. It could just stay right there in China, and these companies are just going to have to write down their revenue by 70%. Just think about that.
Yeah. Early on, we were thinking, could these casinos have an insurance policy against some catastrophic event like this? And it's possible, but who could even underwrite that, right?
Las Vegas Sands claimed that they did not. Now, Wynn has earnings tonight, and it'll be interesting. I wonder if the government shuts down, which they did, the casino operations, if that would trigger insurance. Maybe that is
Perhaps.
part of the reason why Wynn is being supported. I don't know. You think they would have came out and had they should have come out and publicly issued a report if that was the case.
Or maybe they're waiting for earnings, knowing that this is their time to release news about what's going on with their company.
Yeah,
correct.
The reporting standards that we've got, right? Well, yeah.
No, American. I know. No, Wynn's an American company. I mean, like it's
yeah.
It's just the whole thing is odd. I'm looking forward to that conference call today, and I just can't keep myself from not having puts on Wynn right now, even though I know I'm probably gonna get slaughtered because no matter what happens tonight, the national team is gonna come in and support the stock in the morning. It's like I'm a glutton for punishment here.
Yeah.
So I'm gonna keep my puts on Wynn. And because Wynn is more leveraged than LVS, okay? So like LVS has so much cash, but Wynn is actually leveraged, so I think they're more susceptible. If like China decides to stop propping them up, or if I'm just being ridiculous about this whole thing, at some point Wynn could crash 20-30% like that, right? And then I'm just going to continue to protect my portfolio with puts on the S&P. I just puts on SPY because it's highly liquid. And when I trade derivatives, I always go for the most liquid option. That's my plan. That's what I'm going to do. Hey, so we're going to end this thing in a few minutes here, and then
So is our meeting there? Am I late for our meeting?
And we are going to set up for them too. So any other questions here that we think can? Let's see. What do we think about Carnival Cruise stock? Man, it's like right there behind the casino stocks. I think those things. I might just throw a little money behind those too in terms of puts or shorting them. I think
it might be a good idea. I mean, who wants to shove themselves in a tin can with a bunch of strangers after this whole outbreak, right?
Nobody. Oh, by the way, guys, what do you think on the news this weekend? You know that ship in Japan. You know. There's going to be so much footage. Those people are stuck in rooms. They won't even let them leave the rooms, I heard. Right. A lot of those rooms don't have windows. Imagine being in a windowless room for 14 days. You know people are going to be airing videos nonstop, right, from that cruise ship, and it's going to freak people out. And like I think that could be a net negative for cruise. I might throw some. Do
you think they're going to keep the internet on the cruise ship so that people can air those videos, or just shut the whole thing down?
No, I think they're at port, Dave. I don't think they have internet through cell towers. I think
yeah, they're close enough to the port, I guess. I don't know where they are right now.
Listen, again, I want to say we're not predicting something terrible to happen. All we're saying is that if you think you know the outcome of this, you're crazy. I don't care what you hear on CNBC. I don't care what these people are saying. Anyone that claims that they think they know the outcome, that this is just going to blow over in a couple weeks and everything's going to go back to normal like it always does, like it did with SARS, like it did with Zika, like it did with that. It might. It very well might. In fact, it probably will. But we don't know that. And so,
let's say that there's a 5% chance of it going very south, right? Well, that are you willing to ignore the risk that there's a 5% chance of you losing half of your portfolio?
Which could easily, from these levels of where we're trading today, could easily happen. I mean,
you're making me nervous. You're making me need to get online right now and start like buying my insurance policy, which probably is some S&P puts.
You know what, Dave? I want to make you nervous because I'm sitting here 24 hours a day getting so freaking angry that everyone else is so calm. And listen, I get it. Like, I get it. But you have to be realistic about this stuff. Like, this is people's money. This is my money. And, like, I can't just sit here and be like, everything's fine. No one's freaking out on CNBC, so why should I freak out, right? Like no, listen, I played that game. I've been in the market for 30 years, and I know how quickly this thing can turn. So
luckily, dumb money exists, and you no longer need CNBC because you have us in our talking head boxes giving you all kinds of opinions that you'd never see on CNBC.
Hey, disclaimer, we are not financial advisors.
No, we are not.
Financial decisions based on what we're saying. We are telling you what we're doing. We do this for education and for entertainment, and you make your own decisions. You meet with your own financial advisor. We don't know what your risk tolerance is. We don't know what your portfolio looks like. We're not going to tell you what to do with your money. This is just what we're doing with our money. And you know what? We work really, really hard for our money. And this is stuff that keeps us up at night. And I can't imagine that it's not keeping anyone else up at night unless they're being naive about it. I mean, you know, I have like 8 different coronavirus bots on Twitter that are alerting me 24 hours a day. I get those stats at 5:15 Eastern every day of the you know, the number of infected, the number of deaths, and like they're still going up every single day. It is, and by the way, the amount of misreporting that I'm seeing, like on CNBC and other channels, about just stats that are just literally being misinterpreted, misreported. It is mind-boggling that people are getting away with this. Are you ready to talk about a startup app now, Jordan, Dave?
Yeah, I'm gonna probably be a little late to that meeting, but we're gonna shut this down. And
because if you want half an hour too late. Yeah, you got half an hour to get here because you're gonna like this company. Dave, what's coming up on our next episode of Dumb Money?
So we are going to do a very interesting non-live episode. We're going to try to air it on Tuesday. We're exploring a new way to make money that has absolutely zero downside risk. Tuesday, noon Eastern, 9 Pacific.
We got some cool stuff coming up this month. And by the way, we need to take an LA trip. I got like 6 hot startups in LA that we got to go meet with out there, Dave. We have so much cool stuff happening right now. Yep. You know what? If this thing gets crazy, we might do another live over the weekend. Who knows? We might be back here.
We will definitely, yeah. And so basically, I want to get into a more regular schedule of doing these. If Thursdays work for you, that's cool. If there's a better day and you're watching the replay and you'd rather see it some other time, let us know in the comments, because we do respond to every comment.
Oh, by the way, there is one comment I just saw that I want to acknowledge. We are looking at this. The reason why we're looking at this so intensely is not just the degree to which we need to hedge our portfolio. If we see this thing start to turn around, like actually turn around, not the fake news, oh, there's a cure. There's no cure, guys, for coronavirus. But if we see something start to get better, I love this market where it is right now. There are so many trades I'm going to make. I actually see myself buying Wynn and buying LVS and buying, like doubling down on some of my other equities right now, as soon as I see coronavirus start to lighten up. So I agree. We're going to see I think the market potentially goes to new highs if we see coronavirus kind of dissipate. It's not happening yet, but there are a lot of reasons to keep a close eye on this virus.
Absolutely. And with that, I guess I'll just thank you guys for watching. Hopefully you found this discussion helpful. If you did, right now would be an excellent time to hit that thumbs up button. The YouTube algorithm loves it when you do that. If you're watching this live and we didn't get to you in the chat, please come back. We're going to have the replay on and repost what you had to say in the comments so that we can respond to it. And again, our next episode with that, it's very interesting. It's Chris's crazy scheme. You may have heard of coin rolling. That'll be Tuesday, noon Eastern, 9 a.m. Pacific. Until then, I'm Dave Hansen for Chris and Jordan. Thank you. We are Dumb Money. We'll see you next time.
Later.